Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, all these previous rejections to the upside were created, and at the moment the market is testing the exact same level. So we have a good probability of seeing a potential rejection to the upside away from this zone, as already happened in the past when the market was testing this exact same level. So on the monthly, everything seems quite bullish. We can also notice that from a pattern standpoint, we have a very strong impulse with now the start of a correction. Now, after an impulse, if you want to measure the correction to identify the first potential retracement zone, so target for the retracement, we have to take a Fibonacci from the high to the low of the impulse leg. And if we do that, we can see that the market is still very far away from the 0.32, which is the first retracement level. So this means that we actually have definitely some space for bullish price action before the market faces the first resistance zone. Dropping down on the weekly time frame, what do we see? Now, here in the weekly, we can see how already the market has created a triple bottom essentially at this zone. So we have good probability of seeing some bullish price action being developed away from this strong weekly support zone. We can also notice how we have this basically horizontal price action being developed. Usually this is associated with the accumulation areas where the market is moving sideways. And we will be speaking more about that in just a few moments. For now, let's keep all of that in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is quite clear. We can notice how the market had created this big daily M pattern. And in fact, I spoke about NZDUSD when the market was here, and I explained all the reasons for which I was expecting this rejection to the upside, which is in fact exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have? Well, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing. Now, if we're looking at the data for the NZD, the first thing to keep in mind is that we are actually looking at NZDUSD because all currencies on the spot are traded against the USD. And we can notice how with the last reports, in the short term, institutions have moved back to the bearish side for NZDUSD, going from minus 47k to minus 55k net positions, which is the lowest level that we had so far. And this comes with no surprise that obviously with this very bearish positioning, the market has been moving to the downside, fueled by this institutional shorting. But now, as we have just seen, this is the lowest level that we have had essentially for a very long time. Usually these extremes follow with an inversion of the trend of the accumulation of positions from an institutional perspective. So there is a good probability that at this point, since we are also at that historical support zone and the price action seems to be suggesting an accumulation zone, there is a good probability. I definitely wouldn't be surprised if with the new report, we start to see a shift back to the bullish side when it comes to the institutional positioning. So institutions to start adding again longs and close shorts, increasing their net positions. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So here on the daily, the very important zone is this resistance. Now, until the market will remain below this level, this market can easily be rejected to the downside. However, If and only if the market manages to break above that zone, that is where things get interesting, because after the break, this previous resistance becomes support. So if the market will create a break above that zone and then go for a retest of the previous resistance turn support, that is where we have good probability of seeing a potential rejection to the upside away from the level for the market to essentially see some institutional longing on the retest of this previous resistance turn support. That definitely wouldn't surprise me. So if the market does break and retest, how would I approach this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share online is just the tip of the iceberg. If you want to learn more, I really suggest that you head over to the link in description, which will bring you to the website in which you have the possibility to gain access to the best trading program on the planet. Here, you will learn and gain access to all my courses. So from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 language, building portfolios of strategies and optimizing them with tools like the Quant Analyzer, and much more. You also have the possibility to gain access to the Trading Station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which you very often see me use on my free analysis. You also have the possibility, if you want to join the integrations, so you gain access to all my personally developed EAs. You see them here presented directly on the website. You also have the possibility to gain access to the live trading show. So essentially a live stream of all trades coming directly from my account as they're open, closed, and managed. And if you scroll down, you will see that after the testimonials for the current time slot, there is still some time to join with the special. So essentially, you have the possibility for still around 3 days to gain access with the discounted price directly from the website and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.